Hello everyone, welcome to Elliott Wave Forex.com YouTube channel. My name is Henry and today is Friday, May 21st. The time is 2 a.m. GMT. Today we're going to be looking at the chart of the euro dollars. This is a 60 minutes chart. We can see right here that we ended with 2 right here in the intermediate degree, and then that means we are now within the wave 3, and within the wave 3 we are about to end with 1 of 3 in the minor degree here. Now with 1 here subdivided into another 1 2 3 4 5 diagonal. Okay, and from here with a new marginal high above this 3 here in the minute degree, we should be ending this cycle. Okay, and then we'll see a 3-ish pullback after that. Now that 3-ish pullback, as long as it stays above this low, technically this is more important low than this one. Now this invalidation level is only for this marginal high here, so I don't think it is a good idea to chase if this view is correct, but it is also not a good idea to sell if the right side actually is higher and if this is a wave 2, right? And remember, if this is wave 2 and we are wave 3, trend always extends. Correction can truncate. I mean, it's a simple principle, so that we basically trade with the trend, identifying the trend is the key, and trading with the right direction, with the right side of the market. Now, so that's basically in the short term. What we can expect is this cycle could be finished soon with a marginal high above here. Then from there we can get a 3-ish pullback to correct this entire cycle before higher again. Now let's take a look at the larger degree and get a context of the move here. If we take a look at the 4-hour partial view, again the full view, full labels can always be seen in the in the member area. You can if you want to subscribe, we have 14 days free trial. So I'm just placing here in the 2 in the intermediate degree in the 1-hour chart here. This is the same location. Then this one in the minor degree is ending right here, right? So we got this diagonal right here. And now after we finish this wave 1, we could be doing a wave 2 to correct this entire rally before higher again. So so this is sort of the context. So the context is the rally that started from March 21st, right? So the rally that started from March 21st is basically proposed to be some sort of a nest here. 1 2 1 2, and then we can continue to extend higher. So it is bullish with that regards, right? Now there's also this trend line here that I draw from March 31st. And now as long as we continue to stay above this trend line, this nest is valid. Okay, this nest idea is valid. Now if euro dollars breaks below the trend line, well, we got two options. If we get something like that, we got two options. Either this is ending with 1 right here, and then you force this maybe some sort of 1 2 3 4 5 or something like that, and then we will be correcting this entire rally in the wave 2, or it can even become a corrective structure. It could become A, B, C, and pullback. Now let's take a look again in the daily. Now when we are looking at the daily here, so far, right, so far the euro dollars has been sideways between January 7 and March 31st. We are unable to break above January 7 yet, nor we break below March 31st, so we are still in between this range here. Now until we literally break above this previous peak 123.50, technically from technical point of view, you cannot rule out doing a double correction. So a double correction would mean that this is actually only a corrective rally, maybe as an ABC, and then starts to sell off like this, and then we'll be doing a bigger 3 swing pullback like this from January 7. So In fact, the bullish confirmation that this is 1212 is only if we can break above January 7, then this count here is going to be fully confirmed. Now, until then, we are taking the more aggressive view, but we understand the possibility. We understand until we break above here, we understand we can do double. Now, when is the time when we should start to be a bit careful about this more bullish count? That is when it breaks below this trend line, right? When it breaks below this trend line here, that's when you start to be careful, because if it does break below here, it closes below that trend line, then possibly it is possible this is only a corrective rally like an ABC, and then starts to sell off again, doing a bigger double correction. But as long as we stay above here, right, as long as we stay above here, we are taking the more aggressive view and calling it for the upside. Now take a look again at the weekly chart to just to give even a bigger context now, right? Let me remove all the label. Now I'm not sure what happened to e-signal here, but just give it a few minutes. It's kind of a little bit slow, right? Normally it's not this slow normally, right? Alright, so let's take a look here. I think we might be able to work something out as of now. Yep, okay, let me make it a little bit bigger here. If you take a look at the weekly here, right, you notice that there's a huge trend line here coming down from 2008. So that is more than a decade old, that is 13 years old trend line. That is, it keeps making lower low until this point of the breakout, and then we retest that same broken trend line, and it held and keeps rallying again. So this suggests, just by the sheer break of the 12-year trend line, and also look at this move here, looks impulsive, that suggests the right side really in a multi-year cycle is higher in the multi-year cycle, because we finally break out of this lower low sequence that started in 2008. So eventually, like I said, eventually we are calling or looking for much more higher upside. No, of course it's not going to happen in a week, much more higher upside, but again, until we break above this January peak, technically you cannot rule this out, but you don't have to forecast something like that, because the right side looks to be higher, and you got a pretty decent pullback here. Even though we have not broken above here, it is best to go with the trend, and the trend looks to be higher, so we call it completed. Okay, we're calling it completed, and yeah, so if we are calling it completed, then the rally from here currently is a 1212 as we are proposing here, and as long as we stay like I said, above that trend line, not this weekly trend line, the 4-hour trend line, then we should be able to continue to extend higher, and that next 1212 is going to remain valid as long as we continue to stay above this. Alright, so that's the update for today. As always, if you do want to get regular updates, you can always check our service. We have 14 days free trial. The link is provided in the description of the YouTube video. I'll see you all again next week. Have a nice weekend, everyone.